Good morning, traders. Oh, let me turn this music down here. Welcome to the TA live stream. Sorry to be a few minutes late. We have, I guess there's a Windows update that's kind of messing around with our software, but I hope you guys are well. Good morning. It's kind of a exciting day in new issue land with Coinbase. We've got Goldman, JP earnings, CPI data, all of that pales in comparison to the attention that the Coinbase IPO that should be happening today around noon, give or take, when they officially gauge market interest. So hope you guys are well. Fun markets as always. Let's see here. Again, I'm Todd Gordon. I'm founder of Trading Analysis, and first vacation I took in a long damn time. So it's been, we traveled, went to Florida. It was great. And got our tan out a little bit, kind of saw how the airline industry is shaping up here, on the verge of a reopening. I can tell you it was all hands on deck. They were full flights. So interesting, but hope you guys are safe and you're doing well and you're getting towards your vaccines. I just got my second Pfizer vaccine and no effects. Fine. My arm's still sore. The only other thing going on in my world is next Monday I'm getting full ACL surgery. Oh my God. It's an old skiing injury. Old ACL, a couple MCLs. I tried that, and we'll get into the markets here real quick. I tried not to venture onto YouTube to see what the surgery looks like. It was a bad idea. Ugh, I'm not looking forward to this, but whatever. It's just going to be me. I'll move this thing under my desk, have something straight out here just to hold the knee up, ice it down, and just sit right here and trade and watch these markets and hang out with you guys. So all of that is fine. So let's bring in the team here real quick. I just want to talk to these guys a little bit. We'll kind of bounce it around here. I think I'm going to call a few audibles on Bennett's show script, unfortunately. So, hey guys, good morning. How are you?
Good morning, Todd.
What do you guys think?
Can't hear you, Bennett.
You're good. You can hear me now. I told you, technical difficulties this morning. Good morning, guys.
What's going on, Terry, Alex, Bennett? How you guys doing?
Doing well.
I
other
get
than
my
this
second
Windows
shot tomorrow.
issue. Do you really?
Oh,
yeah, that'll be interesting. It's the second shot I hear that you really experience the symptoms, if you're going to experience them at all.
Well, that tells you that your immune system's actually functioning. The first shot just triggers your immune system to produce the antibodies, and then the second shot, when it sees it again, yeah, you're going to feel bad for a day or so is what I hear from. I had the Moderna shot, so
yeah.
So you didn't feel too bad for.
Does that mean my immune is not functioning because I don't feel anything? No, I'm sure that's not the case. But
it's only been what, 36 hours, I think. So you should be good.
Should be good. I'm more afraid of knee surgery, to be honest with you.
It's fact.
So, anyway, yeah, whatever. We've all been through it. I went through a whole ski racing career without any knee surgery. So, guys, as far as I'm concerned, you know what I was thinking, Bennett, and sorry to call the audible on you here.
No problem.
I've got some random things I wanted to go through. I think it's important maybe start us off as we usually do a trading analysis with the indexes, where we are in the markets, and I'd like to bring it back and I'd like to show you some of this, talk about this Coinbase IPO, which is really interesting. I've got some anecdotal stories I want to tell you guys about, how to handle a new exchange. Alex and I have been working together for over a decade. We've been through a few of them. Terry and Bennett, we're working on a half a decade here, but I got some anecdotal stuff that may or may not be of interest to the viewers. So I wanted to get the stuff that probably you guys are here for first, which is the index stuff. Get us straight. We finally had the Nasdaq breakout. S&P has been well in the driver's seat for the first part of 2021. I was doing some relative rotation. Watching value, watching growth, seeing that whole dynamic, if that theme is carrying through into 2021, and so far it is. But we're starting to see signs that we're getting a little bit of a shift towards growth and away from value, which was the main sort of theme as the economy as the market was starting to price in a reopening with the distribution of the vaccination. So yeah, certainly a lot of fun, kind of random stuff. I think that's kind of the best way to say it. And again, JP Morgan, Goldman Sachs earnings, nobody cares because we have a cryptocurrency broker about to IPO at a larger valuation than the NYSE and the Nasdaq. So with Bitcoin moving higher. So why don't you start us there if that's okay, Bennett?
Yeah, not a problem. Let's jump into it. Good morning once again, traders and investors. Thank you guys for tuning in. Again, we do apologize for getting started a little bit late. So for those of you who aren't familiar with kind of the back end workings of Windows, there actually are a couple of different versions, if you would, of Windows 10. Not that you would notice the differences aesthetically or even from a feature standpoint, but kind of the original Windows 10, 1904, I believe it was, in 1906, works kind of the best, or it's the most proven with the video mixing software that we use. Well, Windows just forced the 2004 version of Windows 10 and ran into a couple of bugs, but we'll get through it. We do apologize. Thank you for sticking with us. So let's jump into it. Hard right edge with the Motive Wave platform, taking a look at the S&P 500 through the lens of Elliott Wave. And one of the discussions that we had the week before Todd went on vacation was the fact that as it stands now, regardless of the subjectivity of the interpretation of this move off the March 2020 COVID lows, we're still seeing the 5-wave trend establishing moves in the direction of the dominant trend, which continues to be to the upside, and we see the counter trend corrective pullbacks to the downside. And what Todd had suggested was to just break Elliott Wave down into its most basic of concepts, and oftentimes that involves looking for directional moves and counter trend moves. And we continue to see the 5-wave trends to the upside and the 3-wave pullbacks to the downside. So we are just around the corner from summer. Often summer brings with it lethargic, low volume trading. And I do think that a consolidated pullback is a potential that we need to be watching for. However, I will say, regardless of what the higher degree wave count is, I see the motive impulsive trend that started off of the March 5th pullback, which, by the way, the March 5th move off of the Feb 16th high was a simple 3-wave pullback. But I see this 5-wave trend as coming to completion and being fulfilled regardless of what's happening on the weekly or monthly charts. And the reason I say that is we're dealing with a still higher degree 5-wave move to the upside. So we wouldn't envision this market completing a 5-wave rally of a higher degree in a 3-wave fashion. So you wouldn't expect a 3-wave move to complete the trend. We'd be looking for a 5-wave move prior to any 3-wave pullback. Where we stand now, the way I see this particular Elliott Wave count is off of the March 5th low. We had a nice move up into the March 17th high. We had a pullback on the 25th. A couple of days later, we brought a video to you on our YouTube channel, which is, by the way, a great way to stay up to date with what we're doing between the Wednesday live streams. You can check that out, youtube.com/trading analysis. From there, we had 2 upside targets that we gave you guys. The initial was 41.23, which we saw yesterday. Yesterday, we had a record intraday and closing high for the S&P. We actually broke through the 14,000 handle as well for the Nasdaq. So getting down into this orange wave 3, I don't think this orange wave 3 is finished just yet. So what we're going to do is we're going to get off the daily. We'll go down to a 195-minute half-day chart. We had a question come in why we use 195-minute versus 240-minute, which is a more traditional 4-hour chart. 195 minutes is exactly 1 half trading day. This is something Todd taught us many years ago, and it basically allows you to give you 2 candles per trading session. So we like to use the 195-minute chart. So let's start there. You can see the yellow circle there for context. And we've had a fairly significant rally. And what we've done here is, let me go back quickly to the daily. I want to bring in this trend channel, which I had hidden in Motive Wave very quickly with the visibility tool. What we have at work here, and we'll look at this here in just a second, is inside of Orange Wave 3, I see us as just shy of completing the Wave 3 of Orange Wave 3, which means we should be expecting a corrective pullback here relatively soon. What's really interesting about this particular interpretation is you'll notice that the purple channel here, and this purple channel is simply offered from the minor degree trend, so the green 5-wave trend off of the October 2020 lows. You take the simple 243 trend channel to help give you some wave 5 resistance. Off of the daily back down to the 195-minute chart, you'll notice as soon as we got up into the upper boundaries of that trend channel, we consolidate, so price action consolidates, and we're continuing to kind of meander to the upside here. Inside of orange 3, we have the blue wave 3's 1618 at 4163. Breaking that wave 3 down, we have a 61% relationship for that 5th wave compared to 1 and 3 of the green degree here at 4158. So 4150 being a bit of a psychological price level for the index. I do think we're going to see some resistance here between 4158, 4163. I'll be looking for that to give us a 4th wave pullback that we can pair up to this little wave 2 that we had back here into the March 30th low. You'll notice a theoretical completion of this blue wave 3 would give us a 38% retracement, which would basically take you to the lower boundaries of now this gray channel, which got a little bit skewed there. So it would take you to the lower boundaries of this gray channel, and you'll also notice it would basically call for a back test of this now broken parallel channel of the purple degree from the green minor trend. So consolidation, break higher to the 1618, pull back to the 38% potentially. That would take you to the area of the previous 4th. We then get one more ramp to fulfill orange wave 3. Then a theoretical equality of 4 and 2 could take you to retest this purple channel. At that point, we'll be looking for wave 5. And once the entirety of this 5-wave trend off of the March 4th low comes to completion, we could be setting up for some summer consolidation. So that's the S&P. I think regardless of what's happening on the weekly or even the daily higher degree trend wave count, that we're going to see this 5-wave move come to completion. All right, let's get off of the S&P and let me do this. Todd, I'll see if I can clear that up for you right now. It should be coming now to you in 720. Over to the NDX. Taking a look at the NDX, we are a little more extended within the 3rd wave. And let me kind of break this down. Orange wave 3, we still have a 1618 price objective of 14,490. Inside of orange 3, we've seen a pretty significant 3v1 relationship, but I'm not really too concerned about that because I still don't think we have a 4th wave that we can pair up to this wave 2, and I still think we meet that higher degree price objective up near 14,490. So very similar interpretation here, looking for some sort of a pullback, a rally to fulfill orange wave 3, which would take you, I have projected between a 200 and 261% time relationship compared to 1. Coincidentally enough, a 127.2% external retracement of the Feb 16th through March 5th decline is at 14,372. That's just below the orange 1618 at 14,490. So I see this as a fairly decent zone. We'll then be looking for wave 4 to pair up to this. And until you see a 4th wave correction that we can pair up to the wave 2 and a move that either re-challenges the previous 3rd wave high or breaks through it, I don't think we have any worry about a larger correction just yet. And the reason I say retest the 3rd wave high or make a new high, price high in wave 5, is because 5th waves can actually be truncations, which means they can complete before that 3rd wave. I don't think we'll see that, but it is a possibility. Last chart I have for you guys is actually something I noticed working with the RRGs last night. And what I was noticing is a few weeks back, we pointed out some really positive signs on the daily RRG for growth and tech stocks, discretionary. And we suggested that that daily rotation was going to result in a move back into those sectors. We've seen that move unfold. The weekly chart we can see is still a little bit concerning. However, we can anticipate the daily momentum and relative strength to kind of correct the damage, so to speak, that's been done on the weekly chart. The bigger question then becomes, what about the divergence in this kind of rollover on the monthly that we've seen for the SMH, for instance, semiconductors, or VBK, this is Vanguard's small cap growth ETF, or emerging markets, EEM. And so what I did is I went back to 2017, and I want you to notice this date, 6/1 of 17. This is when the SMH had just printed where this arrow currently rests. And that was 6/1 of 17. You can see emerging markets, kind of a very similar rollover. Same for the VBK. Look at where we are now on the monthly RRG. SMH just rolled over. VBK is actually in a much better location than it was back in 17. Look at emerging markets. Emerging markets are technically stronger than they were back then. Now, maybe not quite as much momentum, but the strength is there. So what happened to the SMH back in 6/1 of 17? Well, let me bring you the chart. If I take you to 6/1 of 17, when we started that SMH rollover on the monthly RRG, that was right here. June 1st of 17. We continue to rally 32% into March of 2018 before we saw a larger corrective pullback. What's interesting about this is the fact that within the EEM and the SMH, we have pretty much identical wave counts, which says we're in a wave 5. So this could substantiate the idea that we do have a summer consolidation ahead of us. But a very interesting observation, I think, with the VBK, the EEM, and the SMH, having that rollover on the monthly RRG, yet continuing to rally for quite some time as things digested. So that's it for me. Back over to you, Todd.
Yeah, nice work there. That's interesting. And not, you got to keep in mind with that EEM emerging markets, it's I think half Asia, specifically a lot of South Korea, China, as well as Japan, which has a big correlation to the semis, obviously. So not a huge surprise there. Good work. Let's bring in Terry. Let's do the sector rotation. And then I'd like to spend some time talking about the Coinbase IPO. And of course, we can't talk crypto without Alex on the line here with us. So Terry, take us in. I think you're headed towards technology in the sector spin. So interested to see what you have there. And then we'll bring it back with Alex. We'll talk about that. And then a few more closing thoughts.
Somebody got to give me the screen back, Todd, please. I can't
how would one go about doing that? I hate
I've got it. We're good. I just
thank you.
Yeah, no worries.
I've only used it for 20 years, I swear, but this new version.
I was going to say, they just changed up the interface.
We're going to.
Yeah, the interface moved on me. I couldn't find it.
We might be the last internet-based company to adopt Zoom. I'm just telling you guys that right now.
All right, let's do it. Take it away, Terry.
All right. Hello, traders. I'm Terry Long here with your weekly sector focus. Like always, let's start with last week's performance of the index and the sectors. So last week, technology returned to the forefront with the Nasdaq moving back up to test its all-time highs. For the week, the index was up 3.87%. Now, the S&P also enjoyed strong gains, closing the week 2.71% up. Now, sector performance was led by the XLK up 4.64%, followed by consumer discretionary up 3.87%, and communications up 3.1%. And the energy sector continued to give back gains, declining 4.24% last week. Now, this week is starting out good too. Monday's price action, though, was kind of muted across all of the sectors. There really wasn't a lot going on. But yesterday, the market saw the Nasdaq push to a new record high intraday, up 1.02%, almost to 14,000. We're sitting at 13,986 right now. Now, the S&P moved into key fib resistance, as Bennett just showed you, near that 4150 mark. So far, Monday and Tuesday's price action, Nasdaq up 1%, S&P up 0.3%. And you can see the sector performance here. We've got discretionary out ahead here, up 1.7%. I think I've got a little table hidden behind here that kind of shows you gives you all the technical numbers here. Utilities making a bit of a rebound here, up 1.27. Also real estate, but those guys are not really driving the market. Let's jump on over here into the weekly sector RRG. Our leading sectors this week remain unchanged: energy, financials, communications, industrials, and material. Now, although the energy sector sports the leading relative strength rating, most of the stocks in this sector are experiencing ongoing consolidation as we see this declining momentum vector. Now, this week, the financial sector kicks off earnings. I believe JP Morgan reported this morning, and excuse me, got an itchy nose. Todd will talk about that probably, but we're looking forward to see what all the big banks have to say. This sector has sort of resumed a northeasterly heading, but you can see the vector is very short. So when the vector is very short, it means there's a lot of stability. Now, I'm animating, what I'm animating here is that last turn you see. That's the effect of Monday and Tuesday's price performance on the XLF has caused the heading to now start to show a bit of decline. Now, the communications sector, the XLC here, is also had been moving in a northeasterly heading, started to roll over last week, and now is continuing to see a southerly movement, indicating slowing momentum in communications. Now, this one sector here sporting this very long tail is the industrial sector, and this very long tail is done because of a velocity in momentum, right? So we're seeing accelerating velocity, accelerating momentum, pushing up here into the leading quadrant. Now, this sector started forming a hook. Let me animate this back for you here just a bit. Right about here, you can see the hook formation. This is why we focus on this. Industrials recaptured investor attention around the end of February, and you can see the acceleration push right back through the weakening, right back up into the into the leading quadrant. On the heels of the industrials, also note here that the materials sector is moving forward and is now gaining momentum, and it has, on this last tick here, Monday and Tuesday, it has penetrated back into the leading quadrant as well. So the investor indecision that I spoke about previously in this sector appears to be cleared as stocks in this sector continue to gain momentum. Let me scroll my notes up here. In the improving quadrant over here, let's take a look at real estate. The trend that was moving upwards appears to have hit a roadblock, and the sector now showed a hook back to the south, maybe a little bit of a turn east in this last tick. But again, this sector did not achieve a breakthrough. If it continues in this vector now, maybe we'll see it penetrate. But I'm nervous. I think XLRE may actually rotate back down before it comes back into the leading quadrant here. Now, down in the lagging quadrant, notice the color change here on the XLK and the XLY. The XLK is showing an improving trend as we see this vector color has changed to blue. And technology's downward velocity has slowed dramatically. We could be seeing the initial formation of a northerly hook soon here in the XLK. We saw a northerly hook start to form here in the XLY. It's a little bit hesitant right now. You can see the color change happened just on this last two ticks here, Monday and Tuesday's price impact. So this is all dynamic, real-time events happening here. We're seeing the rotation. We get excited when we see these hooks start to form because we know we're going to start gaining momentum, and investors are going to start flooding back into these stocks. So that's the time to get your watch list developed and start looking at new plays. The healthcare sector, I think the outlook here is still poor as the vector was actually accelerating downwards. However, I will note Monday and Tuesday's price action has made a bit of a reversal here, and there is an early signal of a hook there in the healthcare. Now, consumer staples has just been really rallying high momentum, but its relative strength is deep over here in the left. It's very low, but there is some momentum plays. There are a few stocks in the XLP pulling this higher that might be worthy of a look. The utility sector is still meandering here in the lagging quadrant with no real positive direction in sight. Okay, let's see here. I'm going to go ahead and move on into our sector focus, which this week is the technology group. And it's been a while since I've done a focus on the technology sector. As investor interest seems to be returning back to this sector, let's refresh ourselves with the makeup of this sector. This is the 8 industry subgroups that make up the technology. Currently have them ordered by the weekly price change. On top here is the software index, followed by computer hardware, both of which are showing positive gains this week. The remaining sectors are slightly lower this week, with the exception of renewable energy subgroup. Yes, those renewable energy firms are not utilities. They are mostly technology companies, and they are down 4.3% this week. Now, let me switch this table from a weekly to a monthly perspective, and I'll show you these subgroups performance here so far for the month of April. This is just through April 13th, but the computer hardware index has returned 9.5% so far this month, closely followed by the software index up 9.29, and semiconductors. The semiconductors have gained about 5% this week also. Now, the renewable energy equipment index, in contrast, is down nearly 15% this month. Now, let's take a collective price performance look of some of these groups. We'll start here with the computer hardware group and take a look at this price chart. So, from this perspective, this group has been in consolidation here since late January, but you might argue really since last September. So there was a big period of consolidation here. There's another period of consolidation here, but it looks like this period of consolidation may be on the verge of completing, and I think possibly have an impulsive move coming soon here in the computer hardware. All-time high resistance level was set January 25th, and that'll be the new target, upside target that we need to penetrate, and then we've got a new rally in place here. The semiconductor group, let me find that here. Let's take a look at this one. So the semiconductor group, an all-time high resistance zone that was set also around mid-February, looks to be broken. You can see this price action now seems to be holding support above this. I think this might, I've turned this this line here from red to green. For me, it indicates that I'm turning it from a resistance line into a support line. Now, it may be a little bit early to tell, but I like what I'm seeing here in the semiconductor group. Now, let's contrast those two with the this renewable energy equipment group. This group is down 42% from its all-time high resistance levels that were set back here mid-February. This is a big, ugly decline. So you can see after this stellar rise, this group topped, and it's been very brutal ever since. Now, while the S&P and the Nasdaq are pushing to new record highs, this renewable energy firm gave up this 42% this year. This group is trading below the 50-day and the 20-day simple moving average and approaching the 200-day. Hopefully it'll find support there. But for now, this group remains and looks very uninviting. Let's move over here into the top 30 stocks by market cap in the technology sector, which recent price appreciation over the past 2 weeks has stalled its further decline into the lagging quadrant, and actually now with an improving trend. Now, a quick glance here shows internal rotation evident, as many of the leaders are rotating lower here into the weakening quadrant. But also, many of those stocks over here in the improving quadrant are now showing accelerating, rising momentum. And this group is positioned now to move over into the leading quadrant soon. Now, furthermore, a few stocks down in the weakening quadrant have actually formed northerly hooks, and they are also looking to return back into the leading quadrant. Now, currently, only about half of this list has a relative strength greater than 100, but I think over the coming weeks ahead, this number will continue to rise. The semiconductor subgroup I've got broken out here is seen here with most of the stocks declining into the weakening quadrant and some pushing into the lagging quadrant. Now, the semiconductor chip shortage news has been taking its toll on many of these stocks recently. However, some here are seen forming reversal hooks. Lam Research, let's zoom in a little bit here. Here's Lam Research, had recently pushed down into this weakening quadrant, but it's now showing a reversal hook back to the north. Let's pull a price chart of Lam up here, and you can see from here that we have breached what was prior resistance now and established a new base level high. So I'm going to convert this from a support or from a resistance level, and that's going to be my new short-term support level, my first attempted support level, and then we'll have a new resistance level here in Lam Research. But you can see Lam has been running up in this sort of a parallel trend channel. It's doing very nicely. In addition to Lam Research, let's close this and let's go back here. Let's take a look here at Teradyne. So I saw this hook begin to form here in Teradyne. It's still moving westerly a little bit here, but we're seeing a rotation here. Also seeing a rotation in QRVO. We're seeing it in analog devices, Cadence Design. Now, Texas Instruments formed its hook early, and it already rotated. You can see Texas Instruments here is already pushed back up into the into the leading quadrant. Now, over here in the lagging quadrant, NVIDIA may be the phoenix rising from the ashes. It continues to sport vertical rising momentum and a little bit of northeasterly tilt now. And if indeed it can break through its upper resistance lines in a long consolidation that it's made since last August, it could be setting up another stage for another significant trend. And you can see here from the time I've written this, yesterday we penetrated above that all-time high level again. So now I've got some new support lines to put in here. We'll see it. We'll get a good clearing of this overhead, and then I'll turn that from a resistance to a support line. But I'm now calling this an impulsive move up 1-2. We are past the 3V1 100% level, which was about here. So we're already near or approaching the 1618. That just gives me the inclination that this is an impulsive move. I see maybe a little bit higher and or a little consolidation coming here in NVIDIA, and then we've got more excitement to come. So I'm liking what I see there, guys. In addition to NVIDIA, you guys might also take a look at Microchip. I think that one is another good one too. It's still too early to call technology a leading sector, but there are signs and signals on the rise that are giving us good indication of a rotation coming back into the XLK soon. So back to you, Todd.
Thanks, Terry. Good work there. He unpacked a lot of stuff there, and I was just listening and kind of thinking here about the beginning. He mentioned that we're seeing some rotation into XLRE, which is real estate and utilities. Two things on that. One, we know you guys are probably aware of what lumber prices are doing and the shortage in new housing supply and this new housing bubble that we apparently are in. It's unbelievable. I've been spending a lot of time on Zillow lately and just checking to see where, you know, my house is. I'm up 20%, and I'm in upstate New York. I'm up 20% a year, and national average is 10, 15%. It's something, not 20, closer to 15. So we're right on national average, but we're seeing a pretty unbelievable move in housing. Is that a result of COVID pushing us down this path of working at home with the increased bandwidth and technology that we have available to us, and people are just leaving the cities and buying houses? Possibly. We are seeing a lot of signs, and you know, the cities are opening back up. So we'll see if that trend continues. And I would say, okay, fine. Maybe that's a little bit of an inflationary signal that real estate is moving. But what Terry mentioned is utilities are also strong. And for me, when I see real estate and utilities pushing together, and there's the opening bell, we're going to go a little bit longer here on this show. Will you guys send me the screen if you don't mind? You know, we're seeing utilities moving up, which means people are again searching for yield. Okay, and if people are searching for yield, does that mean people are taking the view that interest rates potentially have topped out and this move in inflation is not real? So let me just show you these two charts of CPI and core, which is important here. I've got a few things I want to show you, and again, we'll go a little longer, and I will be bringing Alex in here to talk about the Coinbase IPO, which I think is super important and pales in comparison to everything we're talking about here. So this is the headline CPI that was just reported. We bounced up to 2.62% year over year, which, you know, the Fed is desperately asking the market for 2% and saying not only are we changing our policy response, which is to raise rates and become more hawkish and you know, perhaps reduce asset purchases. They said we're going to tolerate it for a long period of time to prevent us from being going down a Japanese style deflationary cycle. But you know, just go out to the max in inflation rate. Let's just put this thing in perspective. Okay, I mean, we've been in a we've been in a very contained CPI reading downtrend channel. I would say it's downtrending since the beginning, since 1987. You know, we since 1980, and you could say, well, okay, the IBM tech bull market began in 1982, so inflation has been very much under control. Kathy Woods, who I'm very quickly becoming a fan of, and I've been very clear with that, she's talking about the deflationary implications with technology and how these companies are changing the way we live, and they're applying, you know, decreasing pricing pressures on the market. So, okay, so that's the headline. You know, it's certainly up to 2.6, but you know, we've seen 2.9, we've seen 3 pre-pandemic, and then you could say, all right, and then let's look at the core. Let's take out food and energy, and it's much more tame. It's up at 1.6%. Well, then you could say, all right, fine. Well, look at crude oil, Todd. Crude oil is ripping. How do you take crude oil out of the equation and say we don't have inflation? All right, let's go back to the max here, and you can see we've been in a downtrending CPI, you know, chart for 30 years now. And you can say, oh, I don't believe it. The Fed's cooking the data. Okay, I mean, we're not China. You know, there is some accountability to this. And then there's something that, you know, I was going to go on. I was on CBC yesterday talking about Bitcoin, which again, we're going to get into in a second, but we're also talking about this J&J news with, I think it was, they've administered 6 million doses. You know, it's roughly 5% of the doses that are out there. The US has ordered 600 million, which is enough for 300 million Americans, which is going to take care of basically everyone from Moderna and Pfizer. And they're saying the airlines were off 2%. The Jets ETF, Jets, were off because of this news. And I'm going to push back on that. And I'm going to tie 2 points together here. So this is the chart I sent the producers, which, by the way, my buddy Steve Chivarone from Federated Hermes was on. Seema Modi turned to me, and right away they said, President Biden is speaking about, I think he was talking about what was going on in Minnesota. So I got bumped right away for the Chauvin trial and unfortunately other things that are happening in Minnesota. So we didn't get to talk about it. But, so this is the Jets, ETF that tracks the airlines. And basically what happened is we just moved up into old support from this ETF at around the 28 level. Support. Pandemic hits, broken. We're just retesting resistance here. So yeah, the market backed off a little bit on the J&J news, and I certainly feel bad for terrible for anybody who was adversely impacted by that, by the J&J shot. We'll see if as we get more information there. But another thing that I wanted to pull this together, this sort of point I'm making is, I don't think it's inflation that's driving crude oil higher. I think it's reopening. It's the demand side. It's which is okay. You could say it's kind of the same thing, but look at the correlation between the airline ETF and crude oil. It's almost identical. The crude oil is moving up based on the market pricing in the reopening. Crude oil is not broken through the old highs. It's on the left scale. Jets ETF on the right. The two are unbelievable. 20, 30 years ago, you would say higher input costs are going to impact the earnings of airlines. That's clearly not the case here. I think crude oil has been moving up, not so much as the inflation is out of control. It's the reopening trade. And we could go back and say, all right, let's take a look at the bond market here. And look, here's the 30-year bond. We've had a pretty big move down. We're starting to hold these levels of support. Might we see a continued push up? We could, and let's take a look at ZN. We'll take a look at the 10-year. It looks like a nice pullback to me. This is the breakout. We got the 200-week moving average here, and again, bond prices down, interest rates up, and they're trying to tell us we're going to have runaway inflation. But again, I'm with Kathy Wood on this. And we've been saying this for a long time. Technology companies are improving profit margins. Unfortunately, they're displacing a lot of jobs, which is keeping that down. And Kathy Wood was saying, even as technological companies continue to innovate and put these amazing new products on us, that's actually going to have an inverse impact on GDP, which is a whole nother interesting conversation. That is not inflationary. So I think what Terry is saying in terms of rotation back into technology, once we get through this inflationary scare that they're trying to tell us, which I've heard for 15 years now, from the beginning of QE1, 2008, not quite 15 years. So that's just kind of what I wanted to talk about there. Okay, and again, we mentioned JP and Goldman reported earnings, not doing too much. And then I do want to talk about the crypto. I want to talk about crypto. Alex is taking care of the short term for us. I've been a crypto holder for a long time. I have about 2.5% of my portfolio in there. And here's the only thing, on a very simplistic view, I'm trying not to get caught up too much in the massive intraday volatility. And this is where Alex is focusing. I've been long. I got it. I added a pretty good position back at around 30,000. Back here. We're coming up in a pretty good zone. This is the count that I'm looking at. Alex is obviously going into much greater detail than I am, and we have a pretty good zone here from 55 up to 99. And we could see a little bit of a pullback from there, and I'm fine with it. I'm just gonna hold on to that, and I'll leave it to Alex. The one thing I wanted to mention, though, and I would like to bring the team in here real quick, and then I will, Bennett, if you don't mind, I'd like to take the screen back and show you a tweet I sent out. The Coinbase IPO. Look, we've been through this multiple times with brokers coming in online, offering high transactional costs. I'm only 42, I guess. I can't. I'm old now. I can't say I'm only 42. But I was trading E-Trade in the first .com run when they're charging us $20 a trade, I'm trading my $2,000 E-Trade account, paying $20 a side. I knew it probably wasn't a good idea, but I didn't care. And then technology comes in and it reduces the transactional cost. Then foreign exchange comes around. This is the new market. If you guys are old enough to remember Forex, this is where Alex and I first met. You know, they had these super wide bid-ask spreads. And the way that these companies would make money, and I used to work for a foreign exchange firm, is they'd have very wide bid-ask spreads. And that's what market makers do. They buy in the bid and they sell in the offer. Clients, retail clients, whoever wants to be a market taker, not a market maker, they're going to sell on the bid and buy on the offer. And that spread, which they're giving up, is going towards the house. That's what's happening right now with Coinbase. And in fact, the spreads that they're charging on top of the transaction fee of the brokerage are obscene. They're obscene. I sent a tweet out about it, and Peter Brandt and I were going back and forth. He's been bashing them on Twitter forever. So do you guys, before I take the screen away, I can't share my screen with all of us still, and I'd like to keep us all in this conversation. Guys, anybody want to jump in here? I want to talk for so long. TA team, any thoughts on this as we're heading into the IPO?
I just say that before Alex jumps in, I'll just say that, you know, on that thing about the spreads, I've been wondering that myself. It's a totally unregulated market, and that can certainly be something that needs to come in play. And there's not a lot of transparency. You know, there's so much excitement. Just buy this Bitcoin or this altcoin or this NFT, and it's buy and sell regardless at what price, right, or regardless of what spread, because there's so much movement, there's so much volatility in it that kind of gets washed under the way. Now, when the volatility dies off, then all of a sudden you notice this huge bid-ask spread. That's it's really taking a lot of your profits away.
Oh, perfect. Oh, sorry, Bennett. We can do this at the same time. So, and Alex, I know you're itching to jump in here. I sent this tweet out just to do when I was going back and forth with Peter. So this is Binance. Alex, would you agree that Binance is probably, maybe besides, this is not Coinbase Pro, but this is Coinbase in Binance. Is Binance probably the most respected with the most volume on the platform, competitor to Coinbase? Is that accurate?
Yeah, between them two, it's the most market share. But Binance has a listing of now, especially in the last couple of months, of much of the altcoins that Coinbase is still not listing. So I think I will show you the Binance chart. It went up from $20 in October 2020, trading at $600 now.
Okay.
So I would say Binance is the top one.
Okay.
For now.
Let me see if I can. Okay. So here is a screenshot. If I wanted to transact on Coinbase a sale of $10,000 worth of the crypto that I'm holding, they were quoting me, and I snapshot this at the same time. They were willing to let me sell, which means they were willing to buy it, $56,951. You go over here to Binance, which is showing you the best bid offer. They were quoting $57,284 as the best bid. So Coinbase is dropping me $320 for one Bitcoin. That's $320 below the current. So they wanted me to. Binance is like, it's way off on the screen. Look, so we're going 28. Or sorry, 84, 83, 80, 80, 79. You got to keep going to get down to 6951. They're quoting me down off the screen here. Okay. On top of, for a $10,000 transaction fee, $150. Like, that's insane. So if I wanted to liquidate, like, that's even worse. And I'm sorry, I've got a lot of old friends in the Forex space, but holy bananas. Like, if I wanted to sell $10,000, I mean, they were going to take they were going to take, like, if you factor in where I should have been filled at 57,284 plus the $150 transaction fee, that's well in excess of 2%. on the fee. The market, retail traders are not going to allow that to continue, and they're going to demand that Coinbase compresses those fees and or leave to go to somebody else. And I'm following a lot of the crypto guys, who are really following this, and they're saying, well, it's their ancillary services that are going to make money. It's the different touch points with clients. I don't know. If you look at the SEC filings here, they're pretty small compared to their transactional volume here. So let me just see if I can find this. Okay. So this is their 2020 year ending. So this is their transactional volume. So it's 1.14 billion on top of their other fees of 136 of their other revenue sources, 136 million. They would their transactional cost is going to come down, and they better build up their other revenue sources if they're going to keep their valuations going. I mean, they're set to be valued at over $100 billion. Again, that's more than the Nasdaq and the NYSE. Total crypto market cap is $2 trillion right now. And the team has helped me figure this out, where you're taking a total market capitalization of equities of $49 trillion compared to $2 trillion, okay? And you have to keep in mind that transactional fees will be compressed. Retail clients will demand that they get a more fairer pricing. And Terry brought up a really good point. When the market is just going straight up with massive volatility, people don't really care so much. But if we go into a period where it goes sideways, that 2%, 2.5% that they're paying, people are going to get pretty upset at that, and they're going to demand that Coinbase demand goes down. And people are not even talking about a sideways market. People are saying, well, if crypto gets crushed, Coinbase is gonna really take it on the chin. So you can be bullish on Bitcoin here, which I am and we are, but you don't have to be bullish on Coinbase. I don't know. I am not a huge fan of this IPO, and I know there's a lot of people who are going to make a lot of money in my. I don't know. I probably shouldn't say this. I know somebody's early in on the IPO, but I don't know. I'm not bullish, guys. What do you think?
Yeah, I mean, my opinion on that account, it's all valid points. But I mean, crypto space, if you look at it around the world, is still very much unregulated from many sides. And in that kind of a messy situation, I will not name the kind of a straightforward fishing in the dark, but I mean, as you know, in Forex, in the beginnings, retail, I mean, it's a kind of a phase where you're gonna take what you can. You know, as the size from a brokerage point until you get established liquidity, competitors, all of that stuff. So I completely agree with you. I think 56 million users now in Coinbase. If the market stumbles down, I mean, much of this also retail clients will get out of the crypto market and run away. You know, so I still don't think the phase we are in, it's gonna allow 100 billion valuation. I see that the beginning valuation from Nasdaq it's 65 billion, and I will even argue on that one if it's going to continue in the future. So I completely agree with you. Maybe coin, it's going to be a coin name of the stock. Maybe it's going to go up, but I think it's going to be temporary, and then it's going to probably market is going to readjust with kind of a changing possible opinions, projections, and all of that stuff. But I completely agree with you. I think it's insane, but you have to understand the kind of the emotional drive, because Christie's actually bid Beeple's work, which is 5,000 everydays, which was sold for 69 million. First time in its 215 years history, Christie's actually auctioned a digital art. You know, so all of this space, if you look at it from different sides, it's still kind of in this emotional, establishing, questioning phase. And I think that's still very much undefined. And I think with time, if we survive several phases more, definitely soon, I think that the pricing will go down and the revenues will go down. So I'm in it with you 100%.
But I think you're right that it's a very emotional market. But also, I'm blown away how technologically advanced and savvy users of crypto are. And that's one of the most bullish arguments out there is it's still pretty freaking hard to go for average, average whatever investor, regardless of age, to log on and figure out how to make a crypto trade. It's pretty hard. And I think once it goes mainstream, it absolutely will be easier. But also, I think the existing user base is incredibly technologically savvy. They will demand and seek out more competitive pricing. I don't think they're going to stand for this for too much longer. And again, we saw it with the Forex brokerages, super wide. And then hold on, let me finish one more point. And then, look what all the major brokerages just did with stock trading transactions. Gone. It's free now to trade stocks, even for RIAs. Right now, it's free. So I think you have to separate the emotion, to your point, Alex, and say, look, it's an amazing, exciting new market. And also, you said Christie's auctioning $68 million NFT. Has nothing to do with Bitcoin. That has to do with blockchain on the Ethereum network, right? Am I accurate with that?
Yeah, but I'm just saying that the total space from the different points, if you look all of the crypto space, it's emotional on many sides, kind of like a sprouting of a new plant in this financial world, and it's still fragile. And I mean, trading crypto in a bull market, which we are now, it's pretty much, as you know, everything is going well when we go up. The point is to save all of this. What if we get in a pretty rough market very soon, and we get some of the other things? User base, it's gonna fly away for most of the people. Losing probably their all what they got. So I'm kind of troubling to kind of see all of this increase and hype. Because we know markets, we are in markets in 20 plus years. I mean, it's going to become tough at one moment, So I mean,
I agree with you.
Very much. Also on taxes, we are still not clear on regulation and taxing cryptos. I mean, we don't know, still nothing, So there is much more variables on the one side of scale towards this emotional hype, So I think it needs to be rationed. It has its place. The crypto space is growing, but we'll have to track it and be rational about it. So I agree with you completely.
Yeah. No, well said. Well said. I tell you what, guys, I know people are probably going to not like this, but do I take Tesla or Bitcoin 10 years from now? I think I take Tesla. I still like Tesla. I'm going to increase my allocation in the managed accounts. I'm loving where Tesla is. They're involved in so many different things, and that's that. So, hey, quick update. Kind of ashamed to admit it. I am studying still for the 65 to launch the RIA. Just an update on that. I punted on it. So here's the deal. I was studying with this book. I finished the whole thing, took all the exams, took most of the exams. Not a very good book. I hate to say it. I got through it, didn't love it, read the reviews online. So I'm going through this one now. I'm going through Kaplan, which is a more kind of established one. This is sort of a get rich quick sort of book for the 65. I didn't feel very confident going in. So I'm starting from scratch with this one, with the Kaplan, and I'm going to hopefully I can continue to study again. I have, and I know a lot of people are asking about the wealth management business. I have to get this done. The other curveball that's in here is I do have knee surgery, big surgery on Monday. So hopefully, if I'm not too loopy, I can continue to study. It shouldn't be more than a couple days. So that's just an update there. I'm going through another training for the 65. It's a bear. But to your point, I think Alex said, or maybe Terry said it. It's unbelievable the amount of regulations that are in money management. This is called the Uniform Investment Advisor Law Exam. it's unbelievable the amount of rules and regulations that are required to manage money. Unlike our research business, so which we've always run a very, very tight ship, and that's what's allowed trade analysis to be a very steady player for 10 years now. So, but yeah, so just an update there. But guys, hey, closing thoughts, viewers, thanks so much. If you don't mind, hit the thumbs up button if you appreciate the work and maybe picked up a thing or two. I'll turn it back over to you guys for closing thoughts, but great job today.
Yeah, I mean, if you guys, if you want to see what a trading analysis view on the cryptos, you can visit tomorrow Crypto Labs as well, because there is a lot of happenings in Bitcoin dominance chart. Altcoins are moving on the upside, NFTs, some of the coins as well, taking a little bit of mojo from the Bitcoin. So lots of tough stuff to cover. So if you want to see some charts, come and visit our crypto show tomorrow.
Yeah, tomorrow morning, 9 Eastern.
9 Eastern, yeah. And also, wait a minute, Bennett, you're a horrible salesman. You know that? Wonderful trader, wonderful analyst. How do you not talk about your NVIDIA trade?
You know, we got started so late, and I just wanted to get the content out. You know how it goes.
I mean, basically, the team did. Hopefully, this is kind of stuff that doesn't happen all the time. I wish it happened this easily. Which you got in the NVIDIA call spread. I forgot the strikes. It was a 600, 625 call spread in NVIDIA, and then 30 minutes later, it went from a $4 spread to an $11 spread.
Yeah, it was a pretty incredible mover. It happened pretty quick. Got in at 480, between 480 and 515. We were scaling in entries and took exits yesterday just shy of 13. So not a bad overnight trade, taking advantage of that breakout there.
That was a nice trade. So, yeah, I can't wait to see if technology continues to rotate back in. And again, watch the inflation data, watch what rates are doing. Watch utilities and real estate continue to move up. That's going to be indicative because those are yield-bearing, yield-producing sectors. If the markets are rotating into those along with technology, that starts to say maybe people aren't going to be as comfortable expecting higher yields from bonds down the line, and they're going to go to the dividend payers of utilities and real estate. And real estate obviously is going to be part of the real estate boom that we're seeing, which is also dependent on rates staying somewhat capped. I've heard of several real estate deals being put aside because of the high rates, but if the rates come off again, then you're going to continue to see the real estate move. But again, the other side of that is the flight from urban areas and work at home. Is it for real? But I'm also hearing more companies bringing people back in. So, man, it's cool out there right now. So, guys, thanks for listening. Hope you enjoyed it. TA team, great job. And see you guys next week. Members, we'll see you in 4 minutes for the member webinar.
Sounds good. Take care, guys. We'll catch you guys all next Wednesday.
See you guys.
Take care.